Hello, traders. I'm going to briefly go over this situation here regarding range trading. I haven't traditionally been very good at it, and I typically get caught up looking for reversal patterns. Like we take this low and I look for a reversal pattern. I wait for the breaker to go above. I wait for a fair value gap. We start pulling away, and I'm jumping in here. And that puts me jumping in here at the top of the range. And let me just hide my lines here for a minute. The way we opened here, this is the opening candle, and so right now these prices are bouncing off the bottom of that opening candle. If we look at it instead of I'm going to try to catch this reversal pattern for it to go and make a new high, because we've already taken a 4-hour high up here, Friday's high, and we've got a lot of fruit down here below. We've got settlement and we've got a 4-hour low down here, so, and also a gap in the market. So I'm thinking we could offer lower. We had quite a push up on Friday. And so that's why I'm shorting the top of the range. Where normally, as I'm looking for a reversal pattern, I'm jumping in somewhere in this little PD array right here. We know we're trickling up, but we finally get a nice fair value gap. And so I'm getting in up here. Now, think about that for a minute. If you get in right up here, your stop needs to go down here below the low or below the breaker, and it's going to be $100 or more. Even on one micro, if you're all the way down here, this is $1 per micro, about $1 a point approximately. So that's $66 stop loss. Now, instead, if you get in at the top of the range, like where I'm in now, and just assume it's going to stay in the range, I'm risking only $35. So your risk reward, if it gets all the way down here to the bottom, which I think it could possibly fill this gap, that's going to put me down here. That's about $293. Well, not quite, but I don't think it's exact. I think it's about half of that. It'll be about $150. Okay, so when we are, and we've been in this range, if you look at the 15-minute chart, that's what I'm trading is a 15-minute range. We've been in this range a long time. And so why would you assume that we would break it? It would make more sense that we would come back down to the bottom of it and just continue to stay in it after being in it for so long. But we may break it. So really, this is just about controlling your risk. If we do break it, I'm out $35. If we do what I think we might do and offer down here, I'm up about $150. That's a nice risk to reward. Now, it's probably going to pop me out here right while I'm on this video. That's okay. The point is very low risk. I've done the same thing over here at NQ. Now we didn't take the lowest low of the 15-minute range, but we came up here and we took the high of this 15-minute candle. And you can see right here, we took the high of this one, and that we only took it by one tick. And now we've offered down to the low of these. We just took those out and we're popping back up. But we may go lower because we also have a gap in the market. We gapped up 66 points when we opened. So coming back down to the low end of this or possibly the settlement is highly probable. We did have that big run up on Friday. A little pullback seems like it would be something we could do. But you don't have to wait until it gets all the way down here. You can expect it to stay in this range. And then we just took those. You could take your profit right there. You don't have to wait for it to get all the way down here. I'm kind of hoping it gets down here, but I'm also watching these candles at the bottom of the range. If we pop those lows and we start heading back up to pop some more of these, then, this trade's over. But the point is, when you do it this way and you assume we're going to stay in the range, you can control your risk a lot better. I'm probably going to lose this trade, but I'm not worried about losing $35. Couple of things I've done differently here. If you notice, it says ticks. So I'm not watching dollars vanish. I'm trying to some different things that will help me control my emotions when I'm trading. Because when I see my dollars coming and going, I get a little bit anxious, and so I might kill the trade. And I'm hoping just watching ticks come and go won't be as much of a emotional drain. Um, I know those ticks are all they equate to dollars, but I've hidden my P and L. I'm not going to look at my P and L until the end of the day, and then I don't know how much money this trade is going to produce. It's going to be a nice amount of money. I would say that's probably going to be, I don't know, $200 or more. And you know, it's just a different way to control your risk when we start getting into a range. A lot of times during the New York session, just the way these candles are looking, we are going to go up here, and that's taking me out right now. But even if we take that one and we show a willingness to reverse, we're still at the top of this range, and we still could come all the way back down. I'm not going to take another trade in this just because we could offer up to here. Not sure where we're going, but these candles show bullishness, and we could continue higher here. So it looks like it's trying to break the range. And that's part of the reason I don't trade them a lot, is because I can pick the very candle where the range breaks almost every time. But I am going to start trading them. I'm just not going to trade them. I'm not going to try to get in at the low. I've done that before. I get in at the low, expecting it to go back to the high with just a small stop loss, and then it burns me alive if I get poked out. It shouldn't burn me alive because my risk is controlled, but it does. I don't like losing. Um, I really don't know. Like at this point, you could take profit on this trade. I've been in a couple of these already, and I just moved my stop to break even. And guess what happened? I got stopped out at break even. Is this the one we finally break the range? Possibly, but I don't really know that. So I have a choice. I could take profit, or I could say, you know what, my levels are good. Let's let this one run a while. Let's see what happens when we take that low. And here, we took the top of the range. You could say that's a 15-minute fair value gap to the upside, and we're pushing higher. We got higher lows, and you could go long here. I could justify a long there. The only thing I don't think is good is we've already taken that 4-hour high. We pushed back up and made a lower high, and right now we're just right about the middle of that opening range candle. Before I'd be willing to take a long on this position, it would need to get above here, break and retest it, and then show me a willingness that we're going up to 80,000 or something up to this one. All right, we just took the low over here in NQ. Can we push all the way through this opening range candle, that whole big old 66 pointer? Maybe so, maybe no. But see, on this one, because I was right there above that's 47 ticks. There's 10 ticks per dollar, I think is what it is. 10 ticks for every $2. That's about a $20 risk right there, maybe 25 at the most. And as it stands right there on one micro, this is 254. We're down at 200 now, so that's 50. That's $100. So that's a 4-to-1 risk reward. That's pretty good. I don't have a lot of size on. If I had a full mini on, it would be a whole lot more impressive with dollar amounts. But right now, I'm just trying to build my account with micros because I've made too many mistakes with minis. So, uh, trying to control my risk that way, because the potential of ruining your account when you're trading a mini in a volatile market like NQ. Everything's been volatile here lately. It's high. If you put on a lot of size, there is definitely the potential of losing your account in a hurry. So, all right, that's it. I just wanted to share that 15-minute range with you, how to trade them.